All right, good evening, guys. Ken at Tortoise Capital, weekly check-in for Foundations course, October 26, 2023. Welcome to the gang. Special welcome to Kurt, Joe's Crier's son. First day here. What you see there is a picture of a Zuni owl fetish called Night Grandfather Owl. I was doing some work today with Mike Three Bears, my Lakota Sioux spirit guide, and he turned me on to this some craftsmen down in New Mexico, and I got this one spoke to me. It's a reminder of my dad and his spirit. His totem animal was the owl, and then this one is called the camouflage badger. The badger is my spirit animal, and the cover of our book has a badger shamanic warrior priest on it, staring out at you. It's a book, published under the Owl Group label, and so I was thinking about that and I said, well, somebody's inevitably going to ask, why am I looking face to face with the badger when this is published by the Owl Group? And probably 1 person out of 10 will ask that question, but that's the 1 out of 10 person that we really want. That's the kind of thought process that to be able to see beyond what's just right there into the meaning. I discovered the badger was my spirit animal when I was talking with my staff about 25 or 30 years ago. We were going on a major training exercise overseas, and we had done some team building, and we were laughing about the fact that we had these little nicknames for each other, and Donald Duck and Baloo the bear and Mowgli from the Jungle Books, and it personified. And so I asked them, hey, well, what is my spirit animal? What is my character? And my adjutant, my personnel officer, oh, sir, you're the badger. That's what we call you behind your back. I said, well, why is that? They said, I was hoping it'd be something like the ninja or the dragon or something. It was the badger. And she says, well, because you guard our lair, you protect us, and once you get a hold of something, you never let go, ever. And she was probably right. So that has kind of stuck with me. That became my call sign on the radio. Much in the same way, I guess, Air Force pilots get assigned nicknames by their peers for some significant reason, and whenever they give you that name, you're not allowed to be anything else. That's your call sign. So mine is the badger, and my dad is the owl. Well, there were no questions submitted formally, so what I wanted to do was to get out of the clouds a little bit. The last couple of these we've been, at the 30,000 foot level and talking a lot of conceptual pieces. I thought I'd reverse direction and get down into the mud and spend some time there with a couple quizzes that I posted. I guess this is the first one I want to do. Yeah, so Bob Rourke, who we call Trader X, he's a good friend of mine for about 30 years. He's been in the tortoise community, one of the first guys. He's a former Army officer, professional money manager out in Colorado, and he really is one of the 3 or 4 long-term pro money managers that are in the community that I have put on my own personal board of directors. There's only 3 or 4 guys who can tell me to do something different than what I'm doing, and then I'll stop and really, really think about it. But sort of an advisor from the professional side of the business. And, we talk most mornings by email or chat or phone, or usually chat. He's a night owl as well. And so this morning, we both triggered on Mattel, M-A-T, because of the enormous gap. And he says, holy mackerel, look at that. And I said, yeah, I know what you mean. And about 30 minutes later, this was the dialogue back. So Matt closed right here, and then this morning the gap was down to here. And when you look at that as a function of the size of the normal noise box, you'll see that in the foundations course when we do visual box trading, that, you know, if the market closes here and then in the last half an hour or an hour price just kind of gets really quiet and does this, that's sort of a sign that the movement portion of the trade is over, and that all you have in this period is algorithms trading back and forth, just trying to stimulate interest or activity, and nothing's happening. And that really, in my mind, can define the size of a noise box. And so one of the things we said, well, if that's how much volatility there is when there's no buying and selling pressure at all, then as soon as the price like moves out of that box or moves directionally more than one box, you have what has to be considered a move away from stasis or moving away from quiet. It might be the first leg of a move. Now, it could be the start of a big move, like a fail stat or a gap stat or a range stat or something, or it might be a fake one go to. But the idea was that there's some kind of noise box. So if we treat this sort of as that last 30 minutes of the day, when everybody is fat, dumb, and happy and are satisfied, that's the size of the box. So, you know, this is something like 6, 7, 8, 9. 9 of those in one direction. Now, it turns out that was by far the largest adverse gap of the day. It was something like minus 9%. And so that'll get your attention when something loses that much value right away. Well, the next thing that happened is that we get an OR3. So the gap opening was here. It actually sold off that far, then reversed up here and closed there. So we're going to see that in between, you know, the low of the day and the closing of the gap, there's something like 10 of those boxes. It's probably a range. I'm not even sure how big it is in terms of a range stat. We'll find that out in a minute. But you could say, well, there's an OR3, standard construction, and I would notice that that we are also wildly oversold. That's not a surprise. So if I'm looking at Williams %R, and the MACD histogram, which was above the line, has now gone below the line. So if I was thinking of this as an OR3, I would be ready to go long here or short there with whatever the size of the MMRB is as my initial risk. If I'm thinking in terms of a WMB3, then I don't have enough information. I do have oversold. So now what I got to do is I got to come up here, and what I'm looking for is a MACD histogram, you know, that has an uptick. So when that first one gets drawn, we're now getting ready to put the second one, the second bar. I have to wait for that next 3-minute bar to close in order to determine, is that going to be one of these, which is a down tick, Or is it going to be one of those, which is an uptick? Probably going to be a downtick. So we're still a couple bars away, realistically, from getting a WMB3 entry. But the OR3 entry, if I was willing to do that, is probably right there. Now, if I'm even more aggressive than the OR, so the OR3 is a pretty aggressive move. In this case, the WMB3 happens a little bit later, but if I wanted to go sooner than an OR3, what I might have been able to do is say, if my MMRB was this big, and this was the low of the day, and it had harshly sold off to this that far, and now it's moved this far, I might be willing to put a trade on here, treat this as my risk box, because it's moved an MMRB off the bottom, and then if it fails, then I'm just going to treat that as a collapsing dragon or new low of the day, and bet that there's a lot more selling going to happen simply on the basis of a big gap. Check or hold? That making sense? Yeah, Lou asks, would I still use a standard MMRB? Yes, I do. And one of the things that happens, the reason I say yes, I would do that, is that historically, the best returns you ever get in this kind of statistical trading are times when you've had a lot of standard price action over the last 30 days, and then you put the statistics on it, and you come up with a frog box of this magnitude, based on something like, it's the average range, and then the amount of variation. So this sort of normal price behavior gives you a frog box of this size. And then the next day, you end up getting not an average range, not a average plus one standard deviation, which would be a range stat move, but you might even get a double range stat move. And on that day, you started off, maybe it sold off and then started to reverse. And in the frog system, what we would do, we were taking a standard frog box, which is really about 3 of the R10. So it's about 1/3 of an R stat. And when it moved a frog box off the low, we were just ready to say, well, that's the first non-noise move, and we'll just treat that as a risk, and then we'll see it maybe get 2 more of those on a average range day. In the search for the MMRB, what we've done is we've kind of rendered that down into 1/10 of a range stat, and so you would typically see 3 of those boxes inside a frog box. And so the logic here would be, I just had this enormous sell-off, and what does the opening price represent? It actually represents a price at which somebody is buying it. A market maker or somebody with a lot of money is trying to buy that. So there is some sense where if this move down was the total fear, once we've seen the open and a low of the day and it's starting to, we could say, well, that is sort of a line in the sand. We know that 2 times out of 5 on the daily charts that the open is within 10% of the high or the low of the day. Meaning that 2 times out of 5, when the market opens here and it goes like that to close up there, and then if we broke that into percentages, that this opening is within the bottom 10% of the day, or it opened here and then ended up closing way down. So it's a giant directional move right from the opening. 2 times out of 5, historically, that is the case. So, if the reason I use the standard risk box is I have an indication that there's an enormous amount of fear. Now, that fear is either justified, in which case there's probably going to be some more emotional selling, or the fear was an overreaction, and now this is going to be the mother of all buying opportunities, and they're going to run it all the way up. No matter which one of those two cases happens, if I'm using a small standard MMRB, the multiple I get on that massive directional move, which is more likely when there's a lot of emotion and fear, that's going to be the best day, the best trade I ever get. So there's an opportunity a couple times a week where something like that is going to happen. On the sell side, it's also like this. So if I know that going into the trade, what I have to be able to do is to be absolutely calm in the middle of a storm. So while this thing is all raging in both directions, up and down and back, if I can simply trade at a level of risk where I have no extra stress, and I am using standard tools and templates that I have great confidence in that are battle tested, and I'm accustomed to hunting out these kinds of extremely volatile conditions. You know, I know that historically that periods of quiet, when the trade starts from quiet, it has a chance to be an amazing move that it explodes. Or it just goes nowhere and I don't lose any money. But also in times of great volatility, when it's already in play, the follow-through is either huge up or huge down. It is almost never the case where this thing sells off, finds the perfect price at the open, and then just goes sideways. I'm almost prepared to say that never happens. It just can't. Because there's so many people who got their feelings hurt and their positions crushed, who have to then get out of the position. Maybe they got to meet margin calls and they're forced to sell. And then somebody's going to buy that inventory. Or, so there's a ton of fear, but there's also a ton of greed from everybody that looks at that and measures it and says, there's no way that that was a purely rational response. There's got to be some panic in there. And I'm just sharpening my knives and I'm getting ready to trade it. In fact, the very guys who push it down that low may be ready, and then there's guys who are ready to go in either direction on the basis of moves, and that's me. I simply look at this and say, if it closed here and then opened way down here, and I put some kind of little MMRB bracket on it, if it goes hard in either direction, if I'm this guy, and I get long right here, and I just get my risk out of there, I'm good to go. I don't know how far it's going to go, but I'm actually pretty calm because it's like this is just a science project. And I can just trail it with a risk box or use some of my other indicators to tell me when hey, once that thing starts rolling over, I know how to get out of it. I can hang an MMRB off the top of the highest high while in the trade. And if it goes back that much, I lose that one. And the only thing I don't know is how big is that move in the middle. I know how big the move was that got me in. It was 1 MMRB. I know how much I'm going to give back on the other end. That's 1 MMRB. So how big is the move in the middle? If it opens and moves a range stat up, and I give back 1 MMRB on each end, there's 8 available to me. So that could be an 8R trade. And if I can get the 2R battle drill, the 4, I might get a second position, a third position, and then I would collect 8, 6, and 4. I have a good chance of getting a 15 to 20R trade simply on a range stat day. And every move that went beyond a range stat started with a range stat move. And so this might be one of those 2 days out of 5 that there's some surprising enormous one. Here's what happens if I start trying to think about that in the middle of the heat. I see that huge gap and it's starting to go up and it says, hey, there's my MMRB, I'm supposed to get in, but I don't feel like I can get in. Now, I mean, this is a battle-tested rule and a template. What's the equivalent rule that you have on how far am I going to let this thing go? I mean, you could do something like, here's the gap down, and this thing starts moving, and it takes out the high of the day, and it starts moving this way. If I haven't entered by here, now I only have this much. How much of that are you going to give back in order that you can feel confident? Well, I don't know, but mathematically, in our strategy, you have to get in 1/3 of the way up, right? From the place you have to get in 1/3 of the way up, so that if you use something like the low of the day, or you have some risk box down to here, and you give back 1/3 of the gap, now you have 2/3 of the gap, and that's if it just closes the gap. But on something where the gap was that huge, I don't know, the bigger the gap, actually the less likely that this is an overreaction and it's just going to run back up to there. Because there was probably some fundamental reason which said this is the new price. So I either have to get in at the MMRB or not later than 1/3 of the way back up the stack in order to keep 2/3 potential. I might say, here's 1/3, 50%, 1/3, and 2/3. So maybe that's like a Fibonacci retracement. And this is really, that Fibonacci, 37, okay, 37.5. Really? 37? That's 1/3, in my view. I don't capitalize the F in Fibonacci. But if the gap was here and it sold off this much and is now starting to go, I go from the low of the day and I say, look, if it just makes a new high of the day, I'll just get in here. After the gap down, sell off to the low of the day and then makes a new high of the day, and that's my MMRB. Why would I wait to here thinking that makes it more likely to go to here? There's no information in that move that tells you it is more likely to go that far. The only thing you don't know down here is if it will go there or not. You cannot know that for that one instant. You can have statistics all you want, but everybody else that's trading this is trading it from emotions and rules and not according to your statistics. So in the moment, I just say, this is the lowest risk entry possible. I literally have the smallest risk because there's no doubt in my mind that if I enter right here and then it reverses through my stop, I guarantee you that I got a collapsing dragon to the short side. And that whatever caused it to sell off 9%, there's another huge move to the downside. So it actually turns out, statistically and logically, that the lowest risk entry is that one. Now you might say, well, Under ordinary circumstances, an MMRB is only going to fail a certain percentage, but because there's all of this volatility in there already, the chances that this fails is even greater. And I say, I don't care, because before I even went long, I made that a short. I put my stop in first at twice the size of what I'm going long, so that if I go long with one unit and then it fails, this order's already in to sell two, and one of them covers that, and now I'm net one short. So put the stop in before you even buy the fearful entry. Why are you fearful? Because you think it's going to fail and go the other way, and that's causing you to worry. So go ahead, put that trade on. Put the trade on that you're worried about facing that makes you lose the other one. There, you just solved that one in one. But the real logic on this is that over time, that day one after the catastrophic event, so you had days minus 30 to day minus 1, those 30 days gave you the size of the frog box and the range stat and the MMRB and all that stuff. And then you had some catastrophic event that was the largest move. And you had, on the day when there was the largest directional move, you had the smallest risk box, and you had the chance for the largest gain. Now, at the end of the day, you drop off the 30th day, and now it's day minus 29, plus this big day. So you're going to have 29 days of something like average ranges, and then one huge day. That is already going to make the frog box go from here to there. And then if there's a big follow through on the next day, which is larger than the previous average, and it might even have been bigger than this one, but now you got 2 days of extraordinary range and 28 days of tiny range, that frog box is going to quickly adapt. So what we've seen is that it takes about 3 days for the frog box to double. So if it used to be $1, which means that your R10 was 10 cents, it takes about 3 days of extraordinary range for that to become a $2 frog box and a 20 cent. And then it's harder to find those great big moves, because what if you had, on the 4th day, you had another move of that magnitude? Yeah, on this day, your MMRB was 10 cents. On this day, it's 20 cents. So if you had an 8R trade on this size move, it's only going to be a 4R trade on that size. So there is an adaptation that happens once we start socializing and accommodating the significant change in volatility. But what I've learned to do is to just keep the same architecture. If you're worried about that, instead of risking $400 a trade, which is for me the production level, make it $100. Now you just reduced your risk by 3/4, but you didn't change the architecture and the trade frame that you have accumulated all of the evidence for, that you've done all your practicing on. But you accepted the fact that maybe there was abnormal risk, and so reduce the size of the dollars at risk in the trade. Don't change the architecture of the template. Use the standard template, just take lower actual dollar risk. And that, if you can make that shift in your mind, you understand 80% of everything. Because what guys are doing is they're changing the theory, they're changing the pattern that they're trading. You know, so I look at the market and it has all this fuzzy noise in the cloud, and from that I say, there's the trade frame. I'm going to get long from here, and there's my risk box. And then they get a lot of repetitions on that, and they build up their rules. And they say, based on the confidence in the statistics, I feel like I can trade $400 as a standard risk on a standard pattern under a standard market condition. Oh, now we just had a 9% gap. The market condition changed. Don't change the pattern, change the dollars of risk to acknowledge that this has us feeling a little nervous. Okay, that's a human reaction. Don't change your tool and your template. Change the amount of risk that you decide. Your risk manager decides how much this is. Your scientist and architect with statistics determine what the pattern was. Let the guy who's worried about the risk in the market reduce the amount of dollars at risk. Don't let them go in and change the science and the skill that you have assembled. That's what I want to say. Have I over answered that? Yeah, that was probably enough. All right, so on these, every blue and green dot is something that you should be able to explain. So 1 is indicating the routine OR3. Now, what you might decide to do is number your page 1 to 27. Maybe it's the other one. One of these has 27 markers on it. I can't remember which one. Maybe it's this one. No, this one has 6 blue dots and I think 5 green dots. And the blue dots, blue is an observation. A green means there's an entry. So 1 blue is saying, look, that's the OR3. And that would be my entry long, and that would be my entry short. Blue dot number 2 refers to this yellow box. Blue 2 is the R10 MMRB. Notice that it's 1/2 the size of the OR. That's how much volatility there was in this thing. It probably dropped 9 MMRBs. That's probably a range stat size gap. That's a large gap. But the other thing I want you to notice is that it gapped here, sold off that much. If you were trading the hybrid frog, you could actually have gotten short and MMRB off the low. You could have, in that mindset, you could have gone here because you're on a 1-minute chart. And when it moves 1 MMRB from the open, we bracket the open, and if it falls out of that box, we get short here with a stop here, and then we try to quickly get to no lose plus dinner for 2. So if you had done that, there's a good chance that you might have been able to get in and then probably just scratch the trade, because this reversal happened pretty quick. But you could actually have been short in the first minute. I didn't even mark that one up because I wanted to use 3-minute bars. So this thing has already moved 1 MMRB off the bottom, and now it's moved 2. It also made an OR3, so I can actually call green 1 is an OR3 entry with MMRB standard work. Check or hold? Yeah, no, OR, opening range. Opening range 3. In the swing system, when I talk about the OR system, that actually is the overreaction. So this is just part of one of the irregularities of our language. You got to know that. So one is actually a trade frame that is an OR3 with a standard wrist box. Check or hold? Check. 2 is a 1, 2, 3 entry. And probably, if I used, it would look something like that. If I'm using the standard OR3. So here's a case where the 1, 2, 3 entry actually lagged the OR3 entry. That doesn't always happen. That's almost a full frog box off the bottom. This is about where a quick frog would enter. Low of the day plus a frog box. And the idea is, look, this was the high of the day. Now here's a new high of the day, and now in the third bar, it's continuing to go up. This is now starting to feel like something that gapped all the way down to here, sold off, and now is on its way to close the gap. If this thing does close the gap, and you waited till here or higher to actually enter so that you could confirm that it was really strong, all you did was reduce the amount of potential reward. You still have to measure how much reward there is compared to the risk you're going to take. So if your hypothesis is that this thing is going to play from a gap down and it's going to close the gap, sort of the last minute that you can get in is, I have to preserve 2 units of reward, 2 MMRBs, and 1 unit of risk. That means mathematically I have to enter 2 MMRBs south of yesterday's close. And so now my discretion is, where inside of this stack, from the low of the day going up, where could I possibly get in? Well, this was the MMRB off the low. This is an OR3. This is a 1, 2, 3, and so on. Now notice that I don't have a WMB3 yet. I got the signal that we were oversold. Awesome. So the W in WMB3 is confirmed. So the next thing I do is go up to the MACD histogram, and I have to get an uptick. I have to see, well, that's a downtick. That's a downtick. If this next bar closes and it was strong enough that the bar at closure looks like this, then I would have the M done. Then I could go up to that closed bar and then go a penny above that, and then I could have my mechanical entry. But I've only, as it stands right now, I don't have that yet. So I only have the W in the WMB3. Check or hold? Okay. Now at blue 3, I want to describe what I see. What is happening in the chat? What's happening at 3? Blue 3. What's the phenomenon? R10, RL10 reversal. So if I closed here and I had a huge gap down, harsh winter is in play. Check or hold? If I had the Red River on there, you'd see that as a harsh winter. But a range stat gap down, trust me, is a harsh winter. Look how red that line is. That thing is red as can be. So that's good. Now I have the R10 bottoms out. That's good. Now here is the RL30. As soon as the RL10 crosses that, I'm going to have a P1, which is the regression line crossover. The RL10 crosses over the 30. I don't have the PSAR dots, so I'm at least 2 bars away from the RL10, hitting a PSAR. So what is that? That's in the SSC, a harsh winter. 2, R10 reversal. 3, RLXD, and that gives me the criteria for the SSC. The owl requires the dragon to reverse and slope up, and the RL30 to also roll up, and that's what gives me an owl, is all 5 criteria. But the SSC only requires the first 3 criteria. Check or hold. Now, I would treat that as an entry. And the reason I look at this and say, this feels like conceptually, that feels like a Kata 2. It's not technically a Kata 2. Because I only have this one low. But in terms of price action, it feels like that. And I might be willing, using advanced hybrid trading, to do a trade frame where I'm 5 cents above this, and I've got a higher low, and I just hang a standard risk box off there. And now, instead of waiting for price to break out through the PSAR, I'm getting an opportunity to capture that with this much risk. If I go further down, I don't quite yet have the uptick yet. So this one is touching this bar. If this had been an uptick, then this becomes a WMB3 by setting the entry just above that, and then using something like probably that same MMRB, I just bring that up into here, and then that would be close to my WMB3 entry. Check or hold. So I've made the case for 3 different possible entries so far. So let's see what else we got here. Now at 4, I'm noticing, in the interest of time, I'll go through this a little quicker. At 4, the RL10 has crossed the spine of the dragon and has crossed the dragon. So this is an RLXD. And now you can see that the PSAR has come down. We're within spitting distance of the SSC entry. If I get an SSC entry in here, like right here, then my risk box is either going to be here to the bottom of the dragon, or to the bottom of the RL10. I have to decide which one of those I'm going to use to trigger the exit signal from that position and make a decision that if price goes through here, do I exit here and treat that as a collapsing dragon? Or do I wait for a violation of this to be the collapsing dragon? This one is certainly a collapsing dragon. On the basis of that much negative energy and emotion, if this failed through here, I'd probably get short right there because I think it's going to come all the way down to here. Because people can see this, and that's just a statistical anomaly that comes from our frame of reference. But I would also notice that we now have the uptick, so I can actually get a WMB3 entry in this region with the stop probably here, and that would be a WMB3 entry long. Four is clearly an SSC, because this is where that R10 is breaking through the declining PSAR, and the PSAR flips at 5, and then notice that it draws exactly where 3 is. So this is a really statistically important measure of support. If this breaks, then this is a collapsing dragon in this region. We don't wait for the low of the day to break, because this is just a fat tail. This looks like a bottoming tail. This looks like noise. Look how much time price has been up in this region and not down here. That's why this level is the statistically significant support level, which if that breaks, we can be short with authority and confidence. We don't have to wait for this, because this is just noise. Check or hold. Now I notice in this region, winter has turned to spring. The dragon is actually starting to slope up. Right in here, the RL30 has started to reverse. We're now in owl territory. We're still on the value side of the Bollinger Band mean, which is when you talk about reversion to the mean trading, when you have an extraordinary move, your target is a return to the mean, and that's the 30-period simple moving average, which is the middle of the river. So notice that while you're waiting for confirmation of strength in here, the reasonable expected move is diminishing. So there's less and less upside move the longer and longer you wait. So to go back to my first question and answer, just use the MMRB, pick the dollars at risk you're willing to risk, 1, 2, or 3 chips. You know, maybe 3 chips is your standard, or 4 chips is your, I don't know. Take a quarter of it. Problem solved. And so 5, the PSAR has flipped. This is starting to come in. Now we wonder, what happens when price, how does this tension resolve? If I got long in here, then this is my tactical space. By the time price breaks through the Bollinger Band mean, I better have my risk out of this and locked in no lose plus dinner for 2. Now we've got the test. Now notice in here, price and the RL10 and the dragon have gotten through the Bollinger Band mean. Not quite on the RL30 crossing the SMA 30. So this is the SMA 30. This is the RL30. Notice the difference between the RL30, which bottoms out here. When the RL30 rolls over, the next thing you think is going to happen is this. This action is going to confirm that we're on the positive side of the trend. And if that price, if it turns out that this sell-off was an overreaction, that price is going to continue to go as guys who are now starting to get confidence continue to buy it, which is going to make the river reverse. So the RL90 front runs the river, the RL10 front runs the 30, checker hold. That's how these things, it works like slow, medium, and fast indicators. Now, it turns out that the sweet spot, if I can say it, in terms of MACD, is that turning point down around in here. You avoided some of the fear, but you got a price level. Whoops, you got a price level that at least lets you get that piece, which is the size of that piece. So you give them one. You try to get the second leg. Now what I hope, now that I see this, I hope that we're going to get another one of these. So if I can use that as my entry, the 1, 2, 3 entry, even if I use that wide stop as my execution risk, I still have 2 reasonable scoops to the upside, which turns out to be back to where the Bollinger Band mean was way back here. And if you project that over, one extension beyond the Bollinger Band mean here is where it was back over there. The mathematics of that is kind of beautiful in a strange way. So at 6, we would say, look, the RL30 has crossed the Bollinger Band mean. Now, this 30 bars of price action of uninterrupted goodness was enough to slowly turn the Bollinger Band mean from here into an upward fashion. And now we've got price, the RL10, the Dragon, the PSAR, the RL30, and the river all pointing in that direction. If you wait for all 5 of those things to be aligned and going, then you're kind of a entry at number 5. And the price that you pay to be certain is that you don't get this, and then it's still a question. It's still a question if this is going to continue to go. Who's left to buy? Is it still going to go and get the gap? Notice that this thing is already starting to stall. All the traders voted through here. All of the guys who took the bigger risks are satisfied, and now they're all saying, I want to preserve that. So if this doesn't go in your way and it starts to trail off, all of these guys who were traders that made money in here are going to start bailing, and now this thing, instead of going up, is going to do that. And your marker for that is probably the Bollinger Band mean. This price that is right here, right now, has to stay above the Bollinger Band mean for this still to be a positive move. It has to stay above that. That's sort of the last desperate act. But that's what you get if you wait that long for confirmation and certainty. Now maybe it goes. My exit, so this was let me give a better. That's 12 o'clock noon. This was 0930. That's 2.5 hours, 150 minutes, 50 3-minute bars. Notice that the RL10 crosses below, and this is where the PSAR flips. Here's where the PSAR flipped at 5. Here's where the PSAR crossed the this SMA. And here's where the PSAR... So that was the measured trend as measured by the PSAR. And this is a legitimate exit no matter whether you entered at 1, 2, 3, 4, or 5. This is lunch. This was the first 30 minutes of madness, including the big sell-off. This is the middle. This is the morning session, 2 hours. 1, 2, 3, 4. 4 chunks of 30 minutes. So you have to go from, oh, the sky is falling and the world is ending, to, oh, I guess it's time for lunch, because it turned out to be a 50% Fibonacci retracement. So as you start thinking, the lesson to leave you with today is remember the logic of the MMRB and why you want to use standard work for abnormal conditions. You want standard work for abnormal conditions. The accommodation that you make for risk is you say, look, if my normal production is $100 per trade, make it $25 per trade. If my standard risk is 400, make it 200 or 100 or 50. Make those standard units for your risk mind, for your fearful mind. How many chips to put on a standard frame? That's a standard frame. Every one of those entries is a standard frame. I always like those. This one feels like the last chance to get in because the PSAR flipped, and I still have some room to here. And now notice how those meet in the middle. And then after that, this is basically noise. Hey, guess how big that box is? This is standard normal behavior. Now, that's only for the rest of the day, because when this closes, the guys who come home from work and look at the end of day, they're going to see this. Holy shit. And that's going to generate a lot of emotion for tomorrow's trade. So there's, between here and the close, there's another 2-hour session after lunch for guys to try to get another move in. It turned out that there was nothing left. It just kind of drifted higher, if I remember. So, as this was going on, Trader X, who's my accountability partner, said, yeah. I said, at this point, 30 minutes in, this is a perfect example of hybrid trading. Yesterday, my intraday position was exited before the close because I fear the gaps. I don't need to play the gaps. So I routinely exited before the close. Today it gets smashed at the opening and then yields an amazing morning hook with the WMB3 and the Anderson regression line stretch. The Anderson regression line stretch would get in approximately there. It sees that huge sell-off, buys the 30 or buys the 10, and then locks it in by the 30. But it plays that reversal. You get an extreme move down, and then when it goes from Z3 back to Z-2, you buy it with a risk box. So that's approximately where this entry gets in. And I said, this is just like picking up apples that fell off the truck on the way to market. What if some new kid is driving the truck and it's filled with apples and he's driving too fast and he goes around that corner too fast and a bunch of apples fall out on the ground and he's hurrying back to market so he can sell it after making this detour? I'm just picking up apples in here, knowing that thing's going to go back. That's all it is. I'm just picking up apples one little piece at a time, and I'm not going to get crushed by the truck because I know my size and I know the risk that I can afford. And I'm focusing in a calm state of mind. Check or hold. This is one where you could mark it up from 1 to 27. This is ETHE, 3-minute charts. At 21, I noticed that we are, and I'm going to do this rapid fire because it's 20 after. And I am going to lock the meeting. And enable the waiting room in order to respect your time and space. All right, so percent R is overbought and the MACD is upticking. That means that this was a really strong move that just went above the Bollinger Band main, so there had to have been a big sell-off. For that all to be true, this is the tail end of a really strong move. And the PSAR just flipped. This is the start of a peak. The R10 in the summer just rolled over, and this is the start of an amazing move downward. Notice at 2, the R10 rolled over, entered the dragon, left the dragon, crossed the Bollinger Band main, hit the PSAR, and percent R went from overbought to oversold that fast, and made this is now lower than it was back over there. At 3, we see the first leg down. To where the R10 pauses. So that's the size of leg 1. The move is continuing. Look at this. This is starting to become less oversold. We're getting very close to a WMB3 entry in here. You should be able to see that happening. Failure to fail further. It didn't fail. That's what a reversal starts to look like. Yeah, it didn't follow through, so it did not get new or high, so there's no WMB3 entry. We now get a second leg down, and that gets reinforced with a steepening of the R10. So look at the, and it terminates in a elephant bar, a catastrophic sell-off. So the size of leg 1 is the size of leg 2. This was an acceleration factor. Notice the PSAR cross. This is where the R30 crossed the SMA, R30. Simple moving average 30. PSAR tracked it here. Now look how orderly this move is. You got price, the RL10, The RL30 is beyond the dragon skin, spine, upper skin of the dragon, PSAR, RL30. Each one of those is a checkpoint on some future reversal. But when all 5 fingers are pointing down, clearly we're in a runway. Like, you don't need to know that to know this is a huge move down. You can see it. But there was a time when all 5 of those were sloping up. And between here and here, that whole thing rolled over. This is the transition phase. You get paid to take a risk earlier in the transition. At 5, you have a reversal bar. You have a WMB3 happening at 25. At 6, the R10 reverses. At 7, the R10 crosses the RL10 crosses the RL30 and enters the dragon and crosses the dragon. At 8, you have an SSC entry because the PSAR flipped at 9, and the yellow box is your standard risk box. And there's your tactical space. If it gets north of the SMA 30, you got a chance for it to get all the way back up to here. But if this fails, you got a chance for a pocket entry short, and you got a chance for a collapsing dragon if it violates here. You got to see those before I draw them. You got to see all of that in this white space. The way you learn to do that is by studying these, learning to see them in the wild, and then applying it in the chart. We're now back to overbought. There's the SSC entry. The R10 crosses the Bollinger Band mean along with price. The R10 turns from spring to summer. The MACD histogram is starting to tick up again. This is leg 1 of the upward move, pause. This is leg 2, and now it's just starting to go. The PSAR is strong. The PSAR left the risk box. The PSAR is crossing the Bollinger Band mean. You get the first indication of some third mice. The third mouse is buying the fact that everything crossed, the R30 crossed the Bollinger Band mean. Third mouse, first mouse, second mouse, third mouse, old grumpy men way up here. RL10 crosses the Bollinger Band mean. PSAR has left the box. PSAR is rising. Now at 15, as I start thinking about a successful trade, now I'm up here at 14, and I got this entry. I'm this far into the trade on that much risk. Now, damn it, where is my trailing stop? I have a 2R win in hand. And the Bollinger Band mean is starting to roll up. I could use as a conservative trailing stop red line 15, which is the PSAR, or 16, the lower skin of the dragon, 17, the spine of the dragon, or the upper spine of the dragon here, which is pretty close. Or if I wanted to just lock it in, I could say at here, let me lock in the PSAR horizontal at 19. Let me lock in the lower skin of the dragon at 20. Let me lock in the lower limit of this elephant bar, which held at 18. Let me draw my stop here. So if I want to use trailing stops, I pick one of those rising. If I'm manually just shifting the stop up, I might pick one of those. At 27, I notice that the MACD is rolling up. If I'm coming down here at 21, this is all on that Williams percenter. Overbought, oversold, stays oversold through the length of 23. So anytime I start seeing upticks, I can actually look at, hey, do I have a WMB3 entry? No, because I keep getting lower highs. I never get the WMB3 entry. So I just keep shifting to the right until somewhere over in here, I can get a WMB3 entry or an SSC entry. The B in WMB3 requires an uptick, a higher high, and that keeps you from chasing a falling knife. Or you can just wait for the SSC to happen. So 23 is that long period of time that it stays oversold. 24 is where it left oversold and is now in the normal space. If I had more dots, I'd say overbought, back to normal, overbought. And now it can stay overbought for a long time because that's where the trend is. When the trend is down, see the PSAR, it stays oversold a long time. That's what the trend looks like. When the PSAR flips and off it goes, that's what the trend looks like. This space between the trends is the transitional state. That's where we're getting paid. That's the noise box. We don't get confirmation that this thing is working until it gets past the Bollinger Band mean and gives us 2R in hand. Now I can invoke a sniper exit. That's when I can start getting serious about capturing gains. Check or hold. So, if you go into Campfire and type the word quiz in the search box, you will find about 500, well, more than 200 quizzes that look just like this, where the blue circles and or the numbers ask you to figure out what's going on. I actually have another workshop that has those 200 or 300 things where it'll just rapid fire and you could put your answers in and all that other stuff. But this is the fastest way that I know to learn to speak our language, which uses the principle of learning languages of I plus 1. You take whatever the last set of statements were that you understood, and you just add one more. So when you understand what 1 is, the Bollinger Band, what's happening at 1, like I said, okay, I got it. I see all the things that are happening. What is 2? That's your plus 1. What happens here? What happens here? Just like I went through, instead of looking at that whole thing after the fact, like a dog's breakfast, start with that slow reveal until you see what's going on and make some notes. And if it's not clear why I put a number, why did I put a circle there? I don't see. Talk to your accountability partner. Kick it around. Ask me a question. That's how we start adding. And then just like pretty soon, you'll become very familiar with all these things that you're used to using, and then add one more until that becomes routine. And each time you're just adding one, adding increments through repetition and the learning of languages, the theory of learning languages. I plus 1. Spaced repetition, Babel, Quizlet, all of those feature flashcards and bite-sized chunks and rapid reinforcement and repetitions. That's how you get it. That's why I say the sooner you start trading forward, one share at a time, or paper trading with skin in the game. That's either one share live or it's public humiliation. nobody thinks poorly. They admire your courage just by putting the chart in. That's what happens. That is a judgment-free zone because we respect the emotional courage that it takes to post your charts in public. That's like going to the guest house in Germany and practicing your German language in front of your teacher and fellow students. That is skin in the game. That's why my German teacher would always take us to the same restaurants where the waitress and everybody knew that's why we were there, was to practice and learn that we were making an effort. And so we were welcomed. And we learned that the Germans really are wonderful people. And that made it easier to speak the language. It made me want to speak the language. That's how you do it. That is how you do it. Or you could go to a 20-hour weekend workshop, hear everything once, and then try to remember it all and put it into practice error-free at home with no guidance or coaching or feedback. Take your pick. I've tried it both ways. All right, that's everything I want to say tonight. We'll get this published and posted in the room, or in the, I should say, in the Foundation's check-in room. Give me about 2 minutes, and then I will fire up the other discussion in the normal way. Okay? So, well done, fellas. Nice meeting you, Kurt. You guys take good care.